Welcome to The Explainer. Today we are diving into India's latest economic survey, and it tells a fascinating story. It's about a country that seems to be running both a sprint and a marathon all at the same time, in a world that looks increasingly volatile.
All right, let's get right into it. And we're not actually going to start in India. We have to start with the global picture. And the words economists are using right now to describe the world economy, well, they're pretty scary. The general feeling is that there's some major trouble brewing.
And it gets even more dramatic. I mean, we're not just talking about a little slowdown here. The fear is a sharp, sudden collapse. You know, a system just creaking under the weight of massive debt, slowing growth, and some really deep geopolitical instability. So, this begs a huge question. In a world that feels like it's teetering on the brink, how is one of the world's biggest economies planning to navigate this storm? What's the playbook when it seems like everyone else is just bracing for impact? Okay, let's see how India's economic survey itself talks about this global mess. And trust me, it doesn't pull any punches. It lays out a really pessimistic view of the world that India has to operate in. Now, this is what I find really interesting. The report considers 3 possible scenarios for the global economy, and not a single one of them is good. The best-case scenario they outline is called managed disorder. From there, it gets worse: a disorderly breakdown, or a complete, full-blown systemic shock. But against that incredibly gloomy backdrop, the story does a complete 180 when we zoom in on India's domestic performance. It's like, if the world is slowing to a crawl, India seems to be in an all-out sprint. The headline number is this right here, a projected 7.4% real GDP growth. I mean, that's a huge number. And if it holds, it would make India the fastest-growing major economy for the 4th year in a row, totally bucking that global trend.
And get this, it's not just a one-year fluke. The analysis has actually bumped up India's medium-term potential growth rate from 6.5% to 7%. The argument is that a whole decade of tough structural reforms is finally starting to snowball and pay off.
Now here is the part that's going to make you do a double take. This incredible growth is happening while inflation is shockingly low. Over the first 9 months of the fiscal year, average inflation was just 1.7%. That's the kind of thing that makes economists everywhere sit up and take notice.
And this chart just lays it all out, doesn't it? You can literally see the gap. It really shows how much India is outperforming the rest of the world right now. While other economies are dealing with stagnation, India's engine is just firing on all cylinders.
So here's the crucial point. This sprint isn't some happy accident or a short burst of speed. The survey argues it's being powered by a very deliberate, very patient long-term strategy, what they frame as a marathon.
At the very heart of this marathon is this new idea, strategic indispensability. What does that even mean? Well, the goal isn't to wall India off from the rest of the world. It's the opposite. It's to weave India so deeply into global supply chains that the world just can't function without it.
This is a huge philosophical change in thinking. For decades, the global motto was kind of money over matter. You know, focus on high finance and let somebody else get their hands dirty making the actual stuff. The new thinking is matter over money, a realization that in a fractured world, the ability to physically make things is a matter of national security. And that philosophy breaks down into a pretty clear 3-part plan. First, a massive push into high-tech manufacturing. This is where that strategic indispensability really comes to life. So take semiconductors. By building its own factories, India isn't just making chips, it's trying to become a critical, non-negotiable part of the global tech supply chain. Second, build on its existing strength in global services. And third, and this is key, anchor the whole thing with serious, long-term financial discipline.
A huge part of that discipline is this new target. By setting a clear, long-term goal to get the national debt down to 50% of GDP, the government is sending a massive signal to global investors. It's basically saying, we are serious about long-term stability.
But of course, this marathon isn't being run in a vacuum. The survey is very realistic about the major headwinds India is facing, coming from that same chaotic global environment we talked about at the beginning.
So what could actually throw this whole grand plan off course? Well, the risks are real, they are substantial, and they come from both the outside and from within.
So from the outside, you've got the big threats: a long global slowdown, money flying in and out of the country unpredictably, and more trade protectionism. And then at home, the document points to things like worries over state-level deficits, and of course the big, persistent challenges of creating enough good jobs and closing the inequality gap.
Okay, so one of the most visible headwinds has been the Indian rupee hitting historic lows. And this seems to fly in the face of all the strong economic news, right? It feels weird. So what's actually going on?
Well, according to India's chief economic advisor, the long-term reason is actually pretty straightforward. For decades, inflation in India has almost always been higher than in the US. Just think about it this way. If your prices are rising faster, each rupee buys a little bit less over time compared to a dollar. Over many years, that simple difference in inflation naturally pushes the rupee's value down against the dollar.
But here's the wild, counterintuitive twist from the survey itself. In a world of trade wars and tariffs, a currency that's slowly getting weaker isn't necessarily a bad thing. It can kind of act as a shock absorber. It makes Indian exports cheaper for the rest of the world to buy, which can be a real competitive advantage.
And this all brings us to how the report ends. And it doesn't end with a number or a prediction. It ends with a deep, philosophical choice about the path that lies ahead. The analysis frames India's entire strategy around this ancient concept called Shreya, and it's a really profound idea. It means choosing the path that is difficult, but ultimately good and sustainable, over the path that is easy, pleasant, and gives you a short-term fix. It's all about delayed gratification for a much bigger payoff later. So at the end of the day, here's what it all comes down to. In a world that is on edge, a world that's consumed by short-term panic, India is betting everything on a long, disciplined marathon of reform. It has chosen Shreya. So the ultimate question is, in this chaotic global race, will the marathon runner outlast all the sprinters?